Good afternoon, everybody. It's July 25th, about 4 o'clock in the afternoon. We're broadcasting from the fabulous new video studios here in the Kansas City, Missouri StoneX office, the wheat capital of the world. And it's time to do our global wheat outlook, and we're going to do it for July of 24. I haven't done one for a while. I think it's been the thing to do, not do one, because we haven't had a whole lot to talk about. But now that we've got the July WASD report out, we do have some things, and we can go through the by class balance sheets that the USDA put out for the first time and talk about some of the global situation. I do think we've got some interesting markets coming up here. Um, I see a little opportunity in the second half of the marketing year, but for the first half of the marketing year, I think things are going to stay pretty flat and we're going to stay range bound on futures. Um, I will say the one thing that's different versus a year ago, we're already sharply lower than we were a year ago. We went into harvest this year. Futures were elevated. We've sold off pretty good. And I do think the recent lows will probably hold because we're down to levels that are, you look at the cash markets, and I think the cash markets are down to levels that are probably going to hold on the global basis for the next 60, 90 days. Then we'll start to take a look at how the demand side evolves. I think the demand side is going to be the bigger thing, and that's kind of one thing I'm going to focus on as we get moving here. So let's just get started. So as you know, I work for a publicly traded company. So this is my disclaimer. My disclaimer is these are my opinions and not the opinions of the company. So I've just been disclaimed. So let's just get moving here. So let's start out like we normally do, and we'll talk about our global wheat futures. I do think the headline risk is still the main bullish thing. I just don't know how to define that. Is that a weather issue? Is that a geopolitical issue? I do think that, if we still think about how this thing could evolve with some sort of escalation in the Black Sea between Ukraine and Russia, would have to take a port attack. Specifically, I think would take something of the Ukrainians to try to shut down the Russian export facilities, whether it's in the Sea of Azov or in Novo. But that's the main headline risk I see. The market really doesn't care much, it seems like, if we're seeing Russian attacks on the Ukrainian infrastructure. So that's probably not a problem. The other thing that we're watching pretty close is the fund market and the market structures on the funds. But the most bearish thing remains the Russian export values. Like going home today, FOB values in Russia were, you could buy 1150s for 210, 211. 1250s were some up around 220. But this is the lowest we've been since before harvest. But the values have kind of flattened out. We're probably 50% down on harvest in the winters in Russia and Ukraine. EU harvest is getting rolling pretty good. But as long as we see these flat price values kind of stick around here, I don't think futures have much downside. Now, that being said, we could leg on down. Technically, the markets look like they're pretty well supported here, so we're gonna go ahead with the opinion that the near term lows are in for now. Like I said, probably the other bullish story is what we're watching is this EU quality. The production numbers are pretty much defined now, but now we've got to figure out what the quality is. Big discussion among the trade between the quality in France, the quality in Germany. Could lead to more feed wheat in that region. We'll talk about that, and some additional imports into that market. We'll talk about that. But this will be something we'll have defined for us in 6 to 8 weeks once harvest has declined. The other bullish story potentially could be India imports. I do think they'll have to import something this year. I just don't know how much or when or where. But you just look at the demographics of the country. They're going to have to be a wheat importer going forward, either this year, next year, or the following year. The population growth and the demands there. I would tell you the U.S. production number and stocks are bearish. That's the one thing that, as we've gotten into this harvest, we've got a better winter wheat harvest than we thought. Soft wheat's about as expected. We're going to have a monster spring wheat crop. So that's going to keep a lid on the futures market too, but it's just going to put more carry in the market. Now, my story going forward will be um, the second half of the marketing year. We'll probably see the major exporters carry out to use tighten up a little bit. Um, could potentially lead to a little more extraordinary business for not only the U.S. but Canadian higher quality wheat with some of the global issues we've seen. So, like I said, if we do see a story, it's probably going to start October, November forward as we move into the southern hemisphere harvest, and then we'll take a look at the markets. Okay, I think we need to talk about the funds. We continue to watch the funds participate in these markets even more than they have been. This is our all wheat chart that we look at on where the funds are at. And they've sold this thing back off after short covering. We actually had Matif. They got long versus Matif, and we've sold everything off here. Like I said, I think we're at levels here where they may sell off a little more, but if we get any kind of run in corn and beans to the upside, specifically beans, probably see a little more money flow into the long side of the grains and oilseeds in general. Now, the Chicago, you can see they've sold off. We got a commercial buying, so we're seeing cash business being done. Farmers not selling, so we're seeing the commercials add to their long as the funds have sold it to them. They keep selling the thing off. Index is down actually a little bit in Chicago. You look at the open interest in Chicago, we're right here, middle of the road, perfectly kind of in the middle of the recent volume and open interest numbers. Nothing exciting there. Kansas City, the funds have sold off, but the commercials have also been selling. But this is harvest, right? We've seen a pretty good move from the producer on selling wheat. And that's one reason I think the yields are bigger than people are thinking about is the producer is not only fighting high operating costs and high operating note loans, but if they've got extra bushels, they're selling it. And I think that's what we're seeing. Now we do continue to see them buy on the index side. The index funds continue to add to their long. They're back to near record longs again. I really don't have an explanation for this, but it has been driving the KC Chicago spread somewhat. I don't know about you, but I really don't want to hedge off my inflation risk in being long Kansas City wheat futures. Market structure, Kansas City is a lot like Chicago, just kind of stuck in the middle of the road here, nothing going on. Now, Minneapolis, we do have a story there, not only from a production perspective, but we do have the funds. They were hugely short early in the season, covered it all back out long, and then again are short now. We'll probably see them continue to add to this short. On the opposite side of that is the commercial. You can tell we're seeing cash business being done on spring wheat because as the commercial sells that consumer wheat, whether it's import or a flour miller or an exporter, they're buying futures as their hedge, and we can see where they're at here. A little bit of interest in index funds, which is interesting. Most people won't trade Minneapolis from an index perspective because of the lack of volume and open interest. So it's probably something to watch. Now, it is interesting looking at open interest. We're back up near the highs of the season on open interest in Minneapolis. So not only are we seeing activity from the size of the crop, which makes sense when you think about it, but also this fund short has been pretty active. When you look at the combined managed money net across the CME, the grains, oil seeds, and livestock, we've been talking about this for all commodities, record short across the board. We're probably going to see a little bit of short covering in the bean market. That could lead to a little short covering in the corn, and potentially a little more short covering in the wheat market. And I like to throw this chart in there just to kind of look at these managed money positions, a percent of total open interest. And you look at Chicago wheat, over 50% of the open interest is funds. Now, it's pretty interesting when you look at corn. This number is almost record, but not quite. We've got them over 40% of the open interest on the fund side. And on soybeans, 30, 40%. So you've got a huge chunk of the fund money as a percent of open interest. So if you do see some short covering, it can just accelerate what we see. All right, real quick, let's take a look at a world wheat outlook. Nothing changed from what we've looked at the last few months. Probably the main thing is we've got production going back up to flattening out, but carryout continues to decline. 1, 2, 3, 4 years in a row of declining carryout globally, and it's going to show up in the exporter importer mix. So we look at the change from this year to last year. The big thing here is, Russian production's down 9 to 10 million tons, EU's down, Ukraine's down. Well, guess what? These are all exporters. Now, North Africa's an importer, their production's down, but they're going to have to import more. So you look at where production's up, it's the US, it's Canada, Australia, Kazakh, Argentina. So these are all exporters. So if you look at a net, exporters production is down pretty flat. Just call it down 300,000 from a year ago. But the net importers production's up 11 million ton. That's India, China, and Brazil. So does that 11 million metric ton offset any kind of gains we would think we'd see from the import side of the market? I think it does. Specifically with China, I'm not sure we're going to see. China's got to import wheat because of their TRQs, but I don't think they'll import as much, and I don't think they'll be importing from the U.S. So this is our major wheat exporter carryout to use chart. Now, I like this chart. Now, if you remember last year when I was using this chart, I had my own version of it. I actually am okay with what the USDA has here right now. Mine's a little different, but not enough to mess with. So we've got carryout coming down, the major exporters, carryout to use down to 14%, still above 07. We could see this get altered up a little bit as we get our final numbers from the Northern Hemisphere. But the big thing is the decline in Russian production is more than offset by their carry-in stocks. But in the end, it's going to wind up keeping this chart about where I think it should be for going forward. Now, this is something we put together in here. So the research kids put together this global wheat exporter FOB index. So what we did is we took the major exporters and we weighted them and we watched their FOB prices. And so currently, like I said, Russian wheat's around 210, 220. But you look at the aggregate of the exporter index, it's about 240 when you look at everybody, all the major exporters. And then we took the carryout to use from our major exporters and just kind of threw it in here. It's pretty easy to see when you have a real high carryout, guess what? You get cheap prices. But as we look at over here, with this carryout to use down to levels we were at not too long ago, is this too cheap? Probably not for the front end of the year, but let's see how this thing evolves for the second half of the year. World FOB prices, again, this is Russian, the green. Gulf soft wheat's actually very cheap, just very few little demand. Then you've got French wheat here. And you can see hard wheat is the orange line, continues to be a big spread versus soft wheat and Russian. And these are Canadian values up here. This is kind of an interesting little chart. We've been watching this for a little bit. And probably the big thing is we've separated the major exporters on percent of carryout to use versus Russia and Ukraine. So if you look at Russia, Ukraine, their percent of carryout to use is the lowest it's been for a while. So this could see a little bit of a shift in global prices after the first of the year. And specifically, we'll have to watch how the Russian new crop winter wheat goes in this fall for direction there. This is the chart I do like to look at. This is our USDA domestic use change year over year. And you can see that we had a nice pickup in domestic usage a year ago, and the projection's down this year. And this makes perfect sense for what we're seeing on the demand side. You look at Turkey, you look at Pakistan, countries that are typically importers are not importing today. Pakistan's going to be a net exporter this year because of the size of the crop. So we'll just have to see how this evolves. But this makes complete sense as, our line here was COVID, right? Stocking, destocking, restocking, and destocking. but it's very rare to get 2 years in a row of lower domestic use. So this will be the challenge for the market going into the following year, where production is versus the demand side. Let's focus on here on the importer side for a little bit. So you look at major wheat importers and their consumption versus imports. This has gone flat. Fact is, if you look at imports year over year, they're down. This is a combination of, I think, high interest rates, trade finance issues, but also just shifts in demographics and people shifting away from bread products from just from a price perspective. Then we look at our major importers, domestic consumption versus carry out to use. This is the one that kind of stands out for me. While if this chart stays flat here, when you look at it versus the demand side, the carry out to use is dropping. So if you do see any trend here, it's going back to just in time inventory versus just in case inventory. But it is keeping the importer more current on his import needs. Currency is not going to spend a lot of time on that. I just wanted to throw this in here. We looked at this last year. This is Chicago wheat. The orange line would be in Egyptian pounds. We saw the IMF force the Egyptians to devalue the pound. It's kind of come down, but it's still highly elevated because of the devaluations. Same thing over in Nigeria. This is the Nigerian currency versus KC wheat. Same thing, devaluation. So the cost of importing is much higher for both of these in local currency perspective. Let's talk about Russia real quick. The crop is pretty much made on the winter wheat. Everybody's kind of coalescing around an 84 million metric ton crop. I'm good with that. Now we're focused on spring wheat. Spring wheat is 25 to 30% of total production right now. The only thing we're watching here is they've got plenty of moisture, maybe too much. We saw a situation in the U.S. where we had too much rain, and we have seen some vomitoxin, some other diseases show up. But the farmer's been very aggressive on spraying fungicides too. Will the Russian farmer be as aggressive as the U.S. farmer is if they do see any type of disease problems? But for Russia right now, the cash markets remain the feature. This deal with Turkey not importing any wheat at all till potentially October has really hurt the front end of the Russian export program. Now, we do anticipate Turkey coming back in maybe as soon as September. They have a huge flour milling industry, and they do like that cheap Russian wheat for the quality perspective. Like I said, Pakistan's not going to be buying any Russian wheat. In fact, they're going to be an exporter. And the thing we have to continue to watch in Russia is going to be the currency, how the ruble behaves in the domestic terms, fuel, parts, labor. Are all these costs going to go up, and what's that do to the Russian producer going forward? Just a couple quick charts. This is the Russian production versus consumption and carry out. You can see I think the USDA is a couple million tons too low on the carry out, but nothing like it was 2 years ago. So I'm actually okay with these numbers. You can see the Ukrainian production. This going to continue to decline as long as the war goes on. You're just seeing the Ukrainian farmers struggle with financing, input costs, just overall production. So this will continue to slide as long as the war continues. Now, one interesting thing, I did pull this up to put this in this report. Looking at Russian food inflation, it's up. It's up from last month. It's nothing where it was like in 2022. But keep your eye on any talk of Russian food inflation going higher, because that could lead to some government policies that would change their export programs. You can see over here, I just put the combined Russian and Ukraine wheat exports together, down significantly year over year, but still much above where they were at just 10 years ago. Let's look at the EU real quick. And you can see this is the latest Mars report. Alert map comes out. Too much rain in these regions, in the French wheat regions, in Germany, and up into Poland and the Baltics. This over here is too dry on the corn. So, like I said, we're going to see smaller barley and corn production in the EU, which could lead to more feed wheat usage. But we need to get through harvest to kind of see where things are at. And then we'll see how this crop looks from a delivery perspective into the Matif terminals. And then we can take a look at, get a better feel for what French exports are going to be. Because North Africa is still going to have to import a lot of wheat. You know, in French wheat is the natural flow on that. Now, the opposite of that is Spain. They had a fantastic crop this year. Not going to be needing to import near as much wheat or feed grains. So just real quick, you know, this is Paris wheat, last 15 years price percentage chart. You know, this line here is about 210, 220. That's kind of where we closed today. I didn't update this chart for the front end. But you can see we're kind of down here to these levels that make sense for people to own it. Could we go lower? Yes, but this was a very specific time when we had huge supplies in the US and corn prices were significantly lower too. So just think about how we can trade this thing sideways for quite a while at these levels, then start to see where we're at later in the year. You know, we want to look at Matif futures versus CME and KC futures. This is Chicago. You know, Matif's well priced above Chicago wheat. Soft wheat fits in a lot of places right now. We just got to find some demand for it. And on the KC side, this just precludes. This is when we were importing German and Polish wheat into the U.S. That's not going to happen now. So no imports. And Matif is priced well over KC also. Probably the one story is Canada. You know, we've been talking about early in the year. It was interesting when I refreshed this drought monitor map yesterday. Earlier, when we're looking back at this thing in May, it was a huge drought over here. Now, this drought's still there, especially up in the Peace River, parts of Sask and Alberta, but nothing like it was. Now, we've got this heat coming in for the next 2 weeks. Could probably take the top end off the wheat yield potential. But talking to people I trade with up there, they're not too concerned about it. They're more concerned about it on the canola crop and the pulse crop. Just a quick little look at carryout, production versus demand and carryout. You know, we pulled carryout way down in Canada last year, but they just kept exporting wheat, right? So they'll have if they have the size of crop, we think somewhere around 33, 34 million metric tons. You know, 29 of that's going to be winters and springs. 4.5 to 5 million tons of durum. Plenty of wheat there, plenty of carryout. So this is the combined U.S. and Canadian exports. The one thing we may see is not only the Canadian wheat in demand, but U.S. wheat demand also, both spring wheat and hard wheat. If we continue to see quality problems globally, U.S. and Canada, hard spring and hard red winter, milling wheat may have more demand going forward. Just a quick look at Southern Hemisphere real quick. You know, right now the USDA's got Australia at around 29 million metric tons. Our guys will tell you the crop's bigger than that, maybe 30, 32 down there in Australia. So they'll have a pretty good crop. Should be able to export quite a bit of wheat. Argentina, the crop's off to a great start, but it's very dry down there. They've had some frost events. We'll just have to see how this thing plays out going forward with their spring moisture. But you can see the export side down here. Green's Australia. The orange is Argentina from an export perspective. You know, they export around 30 million metric tons combined between the two of them year in, year out. So any decline in production, specifically in Argentina, could benefit U.S. hard wheat. China, let's talk about China real quick. You know, last year they imported almost 12 million metric tons of wheat. This is where they're at currently. You know, they're probably going to import 9 to 10 million metric tons. I don't think they'll buy much U.S. I don't think they'll buy the soft wheat like they did, but if they would come in, that's an outlier. I look for them to buy Canadian, Australian, probably some Kazakh wheat. They may not have much French wheat to buy. So that could shift some of that demand back to the U.S., specifically on soft wheat, because like I said, soft wheat fits from a price perspective. It's just got a lot of freight when you think about going from the Gulf to China versus going through the Med to China. You can see China spot wheat prices over here. Um, you know, from a price perspective, they don't have a lot of incentive to import other than maintain their TRQ obligations. India is going to be the outlier. So, like I said, we talked about that earlier. So this is production. Production continues to go up. Carryout got pulled down to some minimum levels last year, but they didn't import much, but they did shut off the exports. And, you look at food inflation, we've got food inflation starting to move up higher in India. So as we get later in the year, this is what we'll be watching. These are the spot India wheat prices. They're back elevated again, and these are rice prices. Earlier in the year, we looked at this. You can go back and look at rice carryout to use versus wheat imports. I didn't throw that chart in here, but it's pretty obvious to see when they have high rice stocks, wheat imports don't happen. It's when they don't have rice stocks is when a lot of wheat imports happen. So like I said, if we do see them come in as an importer this year, it'll probably be in the second half of the year. Talk about the U.S. real quick. We're finishing up winter wheat harvest. These are the USDA numbers from the July report. You can see the planted acres and the harvested acres and the production. We're up about 11% on production, a little over 2 billion bushels. You look at winters versus springs, we got a nice bounce back on winter wheat production, up almost 100 million bushel year over year. A lot of that was on the hard red winter too. So Kansas crops up a little over 300. I'm a little higher than that. But overall, nice bump in hard wheat production. Soft wheat production was actually down, and winter wheat production is flat. So we look at winters versus springs on the production side. We had a big pickup in winter wheat production, almost up 94 million bushels. Most of that was in the hard red winter wheat areas. Kansas was up over 300. I'm actually a little higher than the USDA number right now. We'll see how it comes in. Soft wheat egg production was down a little, and soft white wheat production was flat. Look at spring wheat. That's where the big change is. We've got big pickup in production, almost up 80 million bushels a year over here. Big crop in North Dakota, South Dakota, Minnesota into Montana. And, the Wheat Quality Council just finished up their tour today, and they confirmed these type of yields. We have seen some talk of some fusarium and scab issues, but they didn't say too much about it in the tour, just a little bit. So we're going to have a big spring wheat crop. It's going to finish out pretty nice. Could be a lower protein crop. That's the one thing this late heat might actually benefit this wheat crop by putting some protein in it. Okay, looking at wheat stocks here, we've got wheat stocks up 132 million bushel year over year from the June report, mainly in the Southern Plains. The Southern Plains states stocks were up 48 million. Northern Plains states, they were up about 52 million. Soft wheat stocks were down also. When you look at on-farm stocks, that's the big difference. We continue to see the Northern Plains farmer hold his spring wheat inventories, not much anywhere else. When we look at total wheat versus production, this is the first year in 1, 2, 3, 4, 5, 6, 7 years. We're actually going to produce more than we're going to use. We've been pulling stocks down. When you look at the demand side of the market, feed and residuals down here. Now we are going to go to see our exports pick back up. Last year we had lowest exports we've had, I think, since 73. And the USDA's got exports up around 800 million this year, 825 million. I think that's about okay. I'm not real comfortable with the mix they've got on their by class stuff. So we'll take a look at that. So for U.S. wheat, we've got carryout going to come in somewhere. This is a USDA number at 856 million. I'm at 873 million. But you can see my difference is feeding. I just don't see the feeding they've got, specifically on the hard wheat. I'm erring this year on the lower side of hard wheat feeding, just because every time I put too much in, it comes back to bite me. So I'm using less hard wheat feeding. But the carryout still is over 850 million, regardless, whether it's USDA or my number. And so you can see where that puts carryout to use. Okay, on hard wheat, we had 20. This is our planted versus harvested. Our production is going to be a little over 800 million. Now on yield, they've got hard wheat yield around 43 bushel an acre. That kind of fits with our model. So I don't think there'll be too much change there. maybe a few states will alter a few totals in the end. But you can see the big jump in production year over year. And I like to show this chart to highlight just the variability in winter wheat yields. And on the demand side down here, we've got exports. The USDA's got exports at 240. On hard wheat, I'm only at 215. And we'll see how that plays out. But I just don't see the demand side shifting enough early in the year to give us a bigger export program. Now, that can change if we see more quality problems globally where we can see Russian wheat get kicked out of Mexico and we could pick up additional business to Mexico. Looking at sales, we focus on exports on winter wheat because that's the only way you get rid of big chunks of wheat. And right now we're running right on pace to make the USDA number a little bit below it. You can see our top 10 to year to date. Now, I wanted to highlight Brazil. So we've been doing a lot of wheat business to Brazil, but we're up against the duty-free max. So they've got 750,000 metric tons of duty-free imports allowed from the U.S. We've hit that number. So unless we see additional tonnages added to that duty-free portion of their import mix, we're probably not going to export a lot more until that changes, unless prices get way out of control or they can't buy any Russian wheat. By class, this is my by class stuff. Like I said, I'm a little higher in production, lower in demand. My carryout's quite a bit higher. Whether you're trading a 380 carryout or 400 million carryout, still 50, 60% carryout to use. That's not bullish. So you look at Kansas City wheat, the milling basis and calendar spreads. Right now, we're right on the average of the 5-year average on 12 pro basis. And I don't think this really moves a lot. So we're just going to follow the historical pattern on 12s. It's just going to be the carry in the market, seeing the basis move up. And that's what people are doing. They're going to pitch out all the wheat they can in the front end to make space, get ready for fall crop, then tuck stuff away, stick it out of the Dece in the March, and trade these basis appreciation levels that we historically see. Looking at calendar spreads on the right, the SEP-Dece it traded out to 20 a couple times early. It's narrowed up. It traded into 15, 16 a couple days ago. We're back out 16 to 17. I think this thing will trade 18 to 20. You can see our carry out to use, looking at where the spread should trade, comes in that kind of that 15 to minus 20 box. So the problem is you've got the terminal elevators in Hutchinson both bidding 10 over for wheat. Now, that's a problem because it means no one will deliver. Because if you deliver, you're going to get, no one's going to deliver wheat at 9 under when the cash markets are posted at 10 over. So we're not going to see any deliveries versus SEP unless something changes on that basis. So there's really no reason to think this thing will force its way out much past 20. And we won't see any VSR in KC. Delivery stocks are building back up nicely. I did just throw the Kansas wheat balance sheet in here for people to look at, to think about how much we can actually use on the demand side and keep our carryout increasing like it should. So we're going to increase demand about 50 million bushels. That's going to probably be fitting into the domestic market, a little bit of the export market. But it does show we've got exportable wheat stocks that could move if the Gulf would give people the incentive to sell wheat to the Gulf. Just a little carryout to use chart for Kansas here. So we look at the 15-year price for Kansas City wheat. We're just below the average. I think the average is somewhere around 620. From a milling perspective, from a consumptive perspective, can we go much cheaper? Yeah, but I think people are just going to start continuing to get their stuff bought here from a demand perspective. And also, we need to keep futures prices down to a level we can do exports. So I don't see much of a rally here in wheat for the short term. If we do see something will happen, it'll be Ocno forward. Spring wheat, we're going to have a really nice spring wheat crop. Production is going to jump back over 500 million bushels. I'm pretty good with the USDA numbers on this. I don't see any reason to be different. You can see the yield this year versus last year. Now, the USDA's got exports of 260 million bushels. I'm at 270 million bushels. And It's just a combination of cheap prices, adequate supply, and we could see a pretty big EU program out of the lakes in the first half of the year too, with that demand for higher quality milling wheat in Europe that could evolve from the quality issues that are both seen in Germany and in France. Just looking at exports, we're well above pace to make that 260 number. That's why I'm a little higher. Um, you can look at the top 10 buyers year to date. You got Philippines, Mexico, and Taiwan. But then you look at, start watching this chart down here, the hard spring wheat exports to the EU, sharply higher than 1 year ago. Um, how high can that get? I think we could get, 25, 30 million bushels, maybe more than that. And that's kind of where I'm coming up with my higher export number versus the USDA. Still like to talk about this story. This is the spring wheat to Mexico. You can see we're well ahead of pace from a year ago. This is the current inspections, and it's rail. It's this merger we saw a couple of years ago between the CP and the KCS, and it's simply pushed more origination down the pipeline into the Mexican mill market. And this has been a good thing for these guys down here in Mexico because they're buying cheap Russian wheat that's a little challenged on quality and bringing down spring wheat to blend it up to make the grinds they need. That looks to continue. Spring wheat does have a problem, though. You think about the next couple of years, where are they going to be at when we finally get all the soybean crush up and going in Minnesota or in North Dakota, excuse me, but all through the upper Midwest. There's more crush line capacity coming online. So this this crop economics data over here, this is fresh from today. This is stuff Bevan does for me, and I had him run them just to see where we're at. You can see soybeans are a huge winner versus spring wheat. So guys are going to stay in rotations. You're going to continue to see people plant spring wheat, but do they start planting less spring wheat and more oil seeds? I did just a mock up here of the North Dakota soybean balance sheet. They're going to carry in about 25 million bushels. We put a 35 bushel yield on the crop. So when you think about it, they're going to have probably an additional 40 to 44 million bushels of demand this year from the crush plants. Spiritwood got started in March. It's crushing. Castletown's supposed to get up in October. So I think there's probably 40, 45, 40, just say 40 million bushels more demand. Well, that's this number over here in this 242 on the demand side on on soybeans in North Dakota. Well, that's going to double in a year because that's going to be 90 million. So what happens when you take this consumptive number to closer to 300 million? Those soybeans have to come from somewhere. It's going to stop a lot of the beans that were going west to the PNW for the export market, and they're going to have to stay home. But it's also going to incentivize these farmers to plant more spring wheat. So my balance sheet is just a little different from the USDA's on spring wheat, about the same, mainly just because I have a little more exports. And my production, at the time I have 515, so we'll see what the final production number is. A couple of things. The top chart on the basis chart here is 14s. Pretty good pop the last couple of days, so this thing's moved up the last couple of weeks. On the 14 Pro chart, you can see the 5-year average is the red. Now the chart below that is the spread between 15s, which are the red, and the 13s, which are the blue. That is the one issue we might run into. We might run into a lower Pro spring wheat crop that's 13s, 2 VOM. That's bearish spreads. It's also bullish basis. So get through harvest, see where we're at. Calendar spreads. Septis on the right, on the top right, you can see the blue line. That's where we're at current. Green's what we did last year. We traded through 30 going into delivery last year, but we saw some big deliveries. Not sure if you'll see that this year unless we see that quality issue from lower protein 13s that can be delivered in. You can deliver up to 3 VOM at a 20-cent discount. And same thing over here on the bottom side. This is our carry out to use versus where the spread's traded. And you kind of figure that somewhere between 15 to 20 is probably where that Septis needs to trade at for now. Delivery stocks are down sharply, but harvest is coming on So we'll see that build back up. And the chart on the right is just Minneapolis KC. This is a chart we've been watching pretty close. Been have a lot of people watch this thing just to trade it from a spec trade, but also from a milling perspective on premiums. This seems like anytime this thing's gotten down in the 30s, you buy it, and get back in the 40s and you sell. This is a weekly chart over here. So we're not too far from the recent highs, and I just don't see it breaking a whole lot unless you do see a situation where you see that lower quality stuff delivered into Minneapolis, which would uh, be pretty bearish for the calendar spreads. Spring wheat, our 15-year chart we've been looking at, well below average. So if you're a spring wheat consumer, you just get your stuff covered and move on. Can prices go lower? Maybe, but you got to be so far below your budget that you've been running for the last few years. You just get stuff covered. Soft wheat, not going to talk too much about soft wheat. Probably the big thing is we just don't have the Chinese program here yet. So we'll just have to watch and make sure we don't see any Chinese buying. I don't see it happening. They've got a big crop over there. They're going to have to import some wheat, but I don't think they'll buy U.S. just with all the trade stuff going on. Production's down year over year, mainly on just less acres. Yields are down a little bit also, you can see here. Exports, I'm the same as USDA. Maybe see a little more feeding than I've got plugged in for now, but we got rid of the excess supply last year through exports. And if you look at a balance sheet, we're not going to have that big of excess supply this year. Soft wheat sales are running behind. You can see soft wheat sales to Mexico down here. It's our top exporter market on the sales side to date. Just a lot of Latin America, a few other people buying a little bit of soft wheat. It fits from a price perspective, but does it fit for what people need? Like I said, carry out, USDA is a 136. I'm a 121, mainly just on a little smaller production, a little smaller. I've got a little higher feedings, what I've got. And we'll just see how that evolves. But, it's kind of neutral, honestly, from a balance sheet perspective. Basis, my basis chart on the left is St. Louis. You can see it's not reflecting a lot of demand at the Gulf on the CIF market. We're running below last year. But what's interesting, the orange line, this was last year. So this is when China started buying soft wheat. Like I said, I don't see that happening, but never say never in these markets for sure. Calendar spreads, we've got a leg of VSR in Chicago. I don't see another one coming on. We're seeing a lot of people just sell OND premiums on the soft wheat side, lock in margins. So they're probably just want to lock the calendar spreads in against those as they should be. The spread probably trades 20, 25 going forward. This is a VSR calc on soft wheat. Like I said, we've got one leg on. I don't see another leg coming on here. We'd have to trade over, closer to 28 to 30 cents to bring another leg of VSR into play, and I don't see that happen. And delivery stocks are big. We probably should see some more deliveries this year too, but I don't know if it's going to be enough to impact the VSR thing. Chicago wheat prices for the last 15 years, below average. Not a lot to talk about here. If you're a soft wheat consumer, if you're grinding soft wheat, it's a good thing. You got cheap basis, you got cheap futures. You can be pretty patient on buying what you need to out in the deferreds and not pay the carry for now. I'll talk about white wheat real quick. I was out in Walla Walla a couple weeks ago drinking wine. Had to go see a few wheat fields while I was out there. Crop looked fantastic. So going to have a pretty good crop out there. Problem is it's just so limited on the demand side. The only way we get through any problems on soft white wheat is if we have a production problem, and we don't have that this year. You can see the yield the USDA's got plugged in at 68 versus 58 a year ago. Now I do have a little bigger export number. The USDA's got 185 million. I'm at 195, and I'll show you why in a second. But you can look at balance sheets. 35 to 40% carry out to use. That's historical. Not bullish, not bearish. Probably the biggest thing is, the flat price on the FOB side out there is going to stay under pressure. So the farmer's not going to have a whole lot of room to maneuver with where the flat price is at. On the export side, we're running well ahead of the current pace needed to hit the USDA number. It's mainly because of South Korea. South Korea has bought a bunch of soft white wheat. The Philippines is number two, but you can look down here at the chart on the right on the bottom and see how much ahead um, South Korea is. A couple of things we've talked to some exporters we know. They're telling us this is mainly feed wheat. They're not importing Ukrainian or Russian wheat. So this is the reason I've increased my soft wheat carryout number or white wheat export number for the near term. Now, when we get to see what the Australian crop looks like later, we could see that number come back down if they have a big crop. Durum, friends don't let friends trade Durum, but I've actually had to get involved in Durum this year. I've got a couple of food companies I work with, and they buy finished pasta. So I've had to dig into the weeds on a lot of Durum stuff. And the Durum market's just it is what it is. It's you can't hedge it. Production's come back up this year nicely, so we're going to have pretty good production this year. Exports are probably going to stay flat. Food usage will probably move up a little bit. But, this just doesn't change a lot on the acres. We had a nice pickup in acres this year. Good quality crop coming probably, along with better yields. So plenty of supply on the Durum side. Carryout's going to get back up into that 30% carryout to use, whether you use my number or USDA. There's not much of a spread there. Exports, we don't export much first half of the year, so we'll have to see where it comes at. We have seen a little bit of Italy buy a little Durum. They bought Durum last year. But our big take on exports last year was Algeria. Now, with a smaller EU crop on both Durum and on soft wheat, we'll have to see if we can't pick up some additional Algeria business going forward. But right now, they don't have hardly anything on. They have zero on the books. A couple charts we watch on Durum prices. So this is delivered to the Portland export markets on the delivered side on flat price. Then we do watch these country bids. So we have Minot, Great Falls, Bertha, North Dakota, and Minot, etc. Cash price is somewhere between $6 and $7.50, and I think the delivered market's around $9.50. So not a lot going on Durum, and we'll just have to see how prices evolve going forward. So summarize, I do think we'll continue to see Russian wheat continue to pressure the front end of the market. That's the thing to watch. If we see Russian values start to firm up, the whole FOB complex will move up with it. But right now, there's nothing going on with the prices where they're at. U.S. wheat, we continue our inelastic export demand. We need to see some extraordinary demand in the second half of the marketing year. And maybe we'll see that for higher protein wheats, whether it's springs or winters. But we also need to keep KC futures at levels that are competitive to increase demand. Get through Northern Hemisphere harvest, see what the quality looks like, see if this EU crop's the problem we think it is, specifically in France. See if the Russian wheat quality improves as they move further north, and then we'll watch this late drought in Canada. Big thing is demand. It's a couple of things here. Yeah, it's cost of commodities, it's trade finance, blah, blah, blah. It's also demographics. I do think we're seeing a shift in demographics, not only from less people that are eating bread products, but where those people are at and what diets do they really have. So demand's going to be the key going forward. And right now, we've got plenty of supply. Our outliers will be India. Do they finally come in here this year? I probably should have put China in here. I don't think they're here, but let's watch that. North Africa, demand's going to continue to be strong. Their population base continues to grow. They've had that basically 6 years of drought over there. Both Morocco, Tunisia, and Algeria continue to run into production problems. The thing that we're setting up is potential for a rally next year. I hate to even say that, but you look at these world balance sheets where we're pulling stuff down this year, you're going to need to see good production next year. Because even with less demand, if we see any type of production issue next year, stocks are going to be where things could get pretty interesting pretty fast in the wheat market. And we'll continue to watch geopolitics, interest rates, demographics, both in the short term and the long term. So that's it. That's my update for the wheat market. And if anybody has any questions, shoot me a note. And thanks.